Gotta know when to hold 'em, know when to fold 'em. Well, boys and girls, are you gambling or are you trading? Well, in this video, I'm going to tell you a little story of my life. How I went from one to the other, and here we stand today.
Wait. Matron, take them away.
Well, boys and girls, let me quickly make a coffee and I shall tell you all about gambling and how I lost a colossal sum, and probably the reason why I'm doing this video today. So let me grab my cup, because trust me, we all know Scruffy likes a coffee, and he certainly does, in his scruffy mug. How good is that? Yes, Winky's opened up a little merchandise shop. So let me make this, and then we'll toddle off up into the study and we'll have a chat.
Well, we're waiting.
Okay, boys and girls, so if you're still here, welcome, and if this is your first time here, I am the big fella, that is the Scruffy Trader. Must be true, because it says so on the cup. And what I'm trying to do is put trading in the real world, maybe inspire you a little bit with your own trading from my life experience. Now if you go through the channel, and I do implore you to do that, click the little subscribe button, genuinely helps. And also go in the description, find my Twitter feeds for future updates. But you'll also be able to see the journey I've been on over quite a long period of time. And I think time is what we really need to concentrate on. You see, when we have a look at this industry, it's very easy to get wrapped up in the hype. Because even on the front of my videos, I see them all the time. Oh, we're doing the lifestyle free course. Trade without emotion. Stop looking at candlesticks. I'm the only trader. All of this bollocks that you see out there trying to tell you it's going to be rich and quick. Well, I'm going to tell you it's not rich and it's not quick. Now, I make a good living from trading, but I am no means rich. But I do earn, let's just say I earn a professional salary.
Are you serious?
And that's what I get at. And a lot of people, when they see my trading, they might see me do 500 quid a day. But I know plenty of people who earn £500 a day in a normal day job. Think about it this way. If I do £1,000 a week and I do 48 weeks of the year, because obviously I'm self-employed, and if I'm on holiday for 4 weeks, I can't earn. That's 48 grand a year. Now in the UK, that's kind of a normal job wage for sort of lower to middle management. So if I do 100,000 a year, which is sort of there or thereabouts quite possible, I am still earning the same as a professional. So when you see the Lambo boys,
You ding dong!
Give it to me again.
You ding dong!
These guys, they're fucking idiots.
it's kind of a fable, because it takes money to make money. But that leads us on to today's subject of, are you a gambler or are you a trader? They are two different things.
No way!
And the trouble with this industry is it breeds the gambler. Now I know this because I've been through it, and I'm going to tell you a story about the biggest loss that I've ever had, and it broke me, genuinely did. And speaking to some of the guys in the Discord and emails that I get, and don't worry if you contact me, I respond to everybody, I genuinely do, because I've contacted God knows how many different YouTube gurus over the years. None of them speak to me. unless I say I want to buy the course, and then they'll reply. Something happened this week that struck a chord with me. Now, I'm not going to name him, but he knows who he is, and I've got more time for him than most people. I genuinely want the little hobbit to succeed, and that'll be a clue as to who he is, because I do take the mickey out of him all the time, because he's only little. He's like Winky, Tinky Winky person. And I will be down your neck of the woods soon, and I'll buy you a beer. But he's a good trader, but he fell into one of the pitfalls of hanging on to a loss too long, and it hurts. And I've done it, and I'm pretty sure most of you have. It's falling in love with a trade.
Who'd be stupid enough to do that?
Justify, stupid.
And I often tell you it's the emotional sort of impact that has more to do with your trading than your technical knowledge. Now, if you want technical knowledge, I've been around the charts that long. I've ironed it all down into my own way, and if you want to see it, come in the Scruffy Squad and you'll be able to see it exactly as I do it. And while I'm trading, you'll see what I'm going to do before I do it, because funny enough, I don't have one of these. And then the guys, when they see my results at the end of the day, they know exactly what I was looking for and how I was going to do it. But does that give me authority to speak to, well, you guys who've never seen me before? Well, let me just put it into perspective. There are a couple of ways you can go into market, all right? And what I'm going to do is I'm going to pull them up, and you'll see. And I'll also, while I'm pulling them up, I'll give you an insight into which way you should go if you're just starting out in the trading world. Need me coffee, guys. Desperately do. So let me flip this over and I'll explain why I have authority to speak about this. Now, this is my BlackBull account. I'll pull that down, you should be able to see it. That is there, BlackBull Live. And this is the start of my prop funds. As you can see, I started this one on the 1st of May, 50 grand. It's now currently just, well, it's about 82,000 at this moment in time. But what are the two routes you can take into the markets? Well, if you're going with your own funds, obviously you need a broker, which is BlackBull. But what is the benefit here? Well, the benefit is you can either go live or you can go paper trading, use a demo. So if you are gambling, open up an account, but use the paper trade. And then what you'll be able to do is you'll be able to get a feel for how the charts work and the marketplace itself. But also at the same time, you're teaching yourself how the broker that you've chosen is going to work. Now, I like BlackBull for many reasons. They do have good leverage if you want to use it. And I've touched on leverage before. Leverage is ideal for opening positions rather than having a huge position. You'll find out about that in the story I'm about to tell you. And with these, they're dirt cheap to get into as well. We don't need money to open up a demo. All right? So that's one way to go forward. And do I recommend these? Yeah, good execution, superb. And if you look at the spreads, well, it don't get any cheaper than that, does it? But then the other route is, well, I think I know what I'm doing, but do you want to put a lot of money into a broker straight away and lose it? Well, if you're on that way, I had an email from a chap the other day asking that very question. And he's saying, oh, he's willing to invest 3,000 into the broker. And my first question was, are you consistent? And he's like, I'm okay. So well, you're better off going down the route of a prop firm. And all right, it costs you a little bit to get into it.
What?
If you bear with me, I should be able to pull one up for you. This is the 5%ers. It's a prop fund that I use personally myself. That first screenshot was from their journey. and I'll show you how I got to it as well. But at the moment, this is company of choice. They have two ways of going in. Now, if you haven't got a lot of money, use the boot camp and you hone your skill. And then once you've passed the challenges, because you have 3 challenges over 12 months, so you've got plenty of time, you get 100,000 account. So rather than put your 3 grand in, it's only cost you 85 quid. Simple, common sense. But if you are a little bit more advanced, you can go down this route, which is the route that I took. And again, you can start very, very low. So instead of putting your 3 grand in, you could go top of the tree, put yourself on this one here, the 80,000 fund, and you'll automatically get 20,000 worth of funding for 745. So you're keeping your money in the bank, and effectively, instead of going into market and blowing up your 3 grand, you could go into market 3 times if you screw this up. But in the meantime, you might have actually made some money in order to pay for the next one. And that's how you work a prop fund. You use their money to enhance your own money. And the way I've done it in the past is, when I've hit my profit targets at the end of the month, I take half of it out for myself and I leave half in for these guys. Again, I'll kind of back something up here, because I do get pulled from pillar to post all the time. You'll be amazed how many morons is out there, guys.
Oh, make it stop.
This is a deal account. It's my bank account. And there is the 5%ers paying me constantly, over and over, on that principle. So take half of it out. I'm quite happy. Leave the other half in to let it grow, which means my positions grow. And that's where you saw that beginning snapshot. Simple stuff. But these are just websites. What about my website? What about my figures? Okay. Well, let's have a look. Here's a live statement. Now, I am a big believer in my hit rate, because I'm a believer that if you're below 50%, you are gambling. If you're above 50%, the edge is on your side. There is my equity curve mirroring the one that I've just shown you at the start. Daily win rate, well, there you go. I win more than I lose. In fact, 324 trades, 89%. Where else are we at? Okay. So here's another statement. Took a bit of a kick on when it started this, because you can't win them all. 413 trades, 85% hit rate. Look at the equity curve, holding it. And again, there's the win rate, winning more than I'm losing. And then finally, I should have another. Did I pull another one up? I did. There's another one. 717 trades, 89 hit rate. Now, all of them also, if you looked at this profit factor, was greater than 1. And that meant it was profitable and sustainable, what I'm doing. You know, do you get clipped? Well, of course you get clipped. And every once in a while I do get a clip. But all of my greens outweigh these. So what I was driving at with that is just kind of backs up what I say. But it also shows a little bit about what I'm talking about, gambling and discipline. I'm very disciplined in what I do. Okay? And I can't stress that enough. But let me tell you a little bit about that.
Isn't that logical?
So as you've seen, they're live statements of how I earn a living. And I hope you take heed to whether or not to use your own funds or a prop fund, because that can make the difference to your trading as well. And I know that sounds odd, but sometimes when it's your own funds, you will throw caution to the wind because you're not against anybody. But when you're with a prop fund, certainly for myself, I am much more conservative than my own funds because it's not my money. So that helps me with my psyche. And what I'm going to do is sort of a couple of little shout outs to some guys. Obviously everybody in my Discord group, because I genuinely appreciate the support and pushing it forward, and that support helps causes that are good to me, and it makes this channel worth it. But to Dusty brought up this particular question: how did I take the journey to come to the trader that I am today? And the story I'm about to tell you is exactly why I became that trader. But also to a mate, little salute to you. Thoughts are always with you, and you hit the nail on the head with the email that you sent me yesterday about sometimes taking some time out of trading because your headspace isn't in it. You did the right thing. If you're trading in the wrong frame of mind, you ain't trading. You're taking a punt, a guess, and that can be terrible. And then if it goes wrong, that emotional impact sort of accelerates because you've got other things going on in your life. So it can put you on a downward spiral. You need to be calm. But I will keep in touch, keep trucking. We all get there in the end, but you did the right thing. So what's the story? How did I become the better trader I am today? I'm not the best trader in the world, you know, I'm certainly not the worst. But what I would like to think is I'm one of the most disciplined. Now, discipline is probably an understated skill, because you just naturally assume, well, if I press the button because indicator said this and that indicator said that, well, of course I'm right. Are you?
They've done studies, 60% of the time it works every time.
That doesn't make sense.
I've pressed the button and within a tick it's gone 100 ticks the other way, even though all the indicators are saying go this way. The thing is knowing when to press the button, and discipline teaches you that. If you ever watch my videos, I very rarely go straight into market. I use pending orders. Calms me down, gives me time to have a breather, but it means I'm also entering the market where I think the market should be entered. Now, these are traits that I've learned over the years, but when I first started, oh no, not even close. In fact, when I first started, I was shocking. I was a terrible trader, but I was a very good investor, and that might scratch your head. You see, if you go through my life story, and there's a couple of videos on them, like how I became, but the quick version is I used to own a mail order company, and I used to order goods from far off lands, so I needed to pay for them in different currencies. So if you're looking at China and Japan, they're like US dollars. If I was on the continent, Germany, Czechoslovakia, Turkey, they're like euros. So I used to do a thing called forward purchasing, and the watered version is you lock in a price and you can work your budgeting out quite easy, but you can also physically buy the things as well if you so wish. So I might have one price and then I could physically sit on some sort of US dollars as well if I wanted to move quickly. But ultimately, if the exchange rate was in my favour, I got more product in the container. But that was an investing mentality because it was all done on daily charts, and you were forecasting for 3 to 6 months in advance. Now, to forecast that far is quite difficult, but you can see certain characteristics in the chart. And I try to micromanage that down into just a 5-minute chart, because that's what you see all the time. 5-minute chart, in, you're out, wheelie dealy, fabulous. It is to a degree, but the 5-minute chart actually doesn't tell you a great deal. It can help you fine tune the market, but it can't tell you the market. You need to be higher up the time frames, and that's what I'm trying to put into the squad, and it's something that I came about. But you can have lucky spurts. In other words, the wind is in your back and it's pushing you forward because you're actually trading within a trend that you don't know is there. And sometimes you can build up some good money and your ego takes over because your money's getting bigger and bigger and bigger. And you think, I've got this sussed. But you haven't. What you've done is you've took a punt and you've just been lucky. A little bit like sort of betting on a high odds horse that happened to romp home. But the next race you think, well, of course it's going to romp home because it did it last time. Well, it's a three-legged donkey and it just meant on the day it was the best one. And the others, well, just didn't hold up the race. So you put a bigger amount on this three-legged donkey and obviously it comes last and you lose a fortune. Gambling. And gambling is the worst trade you can have. Now, I spent sort of the latter part of my company. I was fortunate in the sense the company was behind me. So my personal trading, if I screwed it up, and I did screw it up, I could refund it. And if I lost £1,000, it wasn't a big deal at the time. But towards the end of the company's life, it was the difference between me actually having a meal on the table and not. So you take bigger risks because you need it, you want it. Gambling. Anyway, cut long story short, I was doing okay. I'd blown up a few accounts, but I'd had a good spell of, I can't remember, it was 18 months to 2 years. And I built up a decent pot. You know, I'd fed into it as well, but I'd built up, and I thought, right, okay, this is cool. But at the time, the company wasn't doing as well as it should. So I was focusing heavily on this. And in some respects, I should have been focusing the other way, but human nature, psychological impact. We all make mistakes. Anyway, cut long story short, I took a short break. And this is 2015-ish. Yes, it was 2015. It was a French election in that year. And I went to Portugal. And it was only going sort of Friday through Tuesday. And I did one of the stupidest things I could have ever have done. One, I was trading the DAX. And I was trading it way too big for the size of the account. Now, we're going back before ESMA rules when the leverage was quite high. And leverage is another thing that you need to concentrate on. It is fantastic buying power to open up any sort of product, but don't use it as buying power to increase your position size. It's one of the best tips I can give you, and it's something that I stress to the 5%ers when I'm training and looking after the guys. No, it can, because as quickly as you make the money, you can lose the money. And this is what happened. So I went away with a good size account, built up. I'm feeling pretty chuffed for myself. And the holiday, believe it or not, was actually paid from the trading account. So I was quite jubilant. And obviously I wanted to keep Joanne's spirits high, Winky, my wife, take her away, because we knew the pressures was coming. Okay. And as much as you think it's great being in business, it's bloody hard, you know. And I don't think many people who haven't done it understand that, you know. When I first started the business, many times I paid the staff, but I didn't get paid myself. That's the nature of the job. But when it's good, you're well paid. Okay. Trading is the same. When it's bad, you don't get paid. When it's good, you get paid very well. The yin and the yang. Anyway, cut a long story short, I went away for a jolly on the weekend. No stop on it. Why? Well, because I knew better. And have I learned? Well, probably not. No, I have. I do have a wide stop, and sometimes I will enter the market without a stop, as long as I'm in front of the screen. But the second I leave the screen, and I know I'm going to be away longer than the candle's going to be open, a stop is in place. It's one of the rules that came from this exercise, what I'm about to tell you about. All right. So your stop placement is key. Protect your account at all times. Anyway, what happened on the Sunday night? bloody thing gapped up, didn't it? And I was short. But it gapped up a colossal amount. Now normally in circumstances it's not an end of the world situation because gaps get filled, but not this day. On the Monday, so that was the Sunday night, gapped up. The Monday I was still away. It kept on going that day, and anybody who's ever traded the DAX knows it can move pretty substantial throughout the day, and it kept on going. And then when I came into the office on the Tuesday morning, fully refreshed, happy, well, that happiness ended very quickly when I switched the computer on and I'd lost £18,000 in what was essentially 3-4 days. Put the position on the Friday and it got its margin call and close out on small hours of the Monday night. The money was gone, nothing left. So what I'd done at this point is I'd let myself get overconfident and it cost me daily. Now the emotional impact of that was huge, and it's only recently that I told Winky I lost that amount of money because at the time we desperately needed it. And it's the worst thing you could ever do is hide your losses from your best partner or your best friend, because it means you're carrying the can on your own, and that is shocking. You need your emotional support from people around you, which is why when you see Winky and I on the screen, I hide nothing from her, not a bean, you know. And if I get into trouble, and I do, trust me, I get into trouble, boys and girls, but we rock solid. And sadly, when the company closed, we lost everything, and I mean everything. You know, we didn't even have enough for groceries. We were down to about £25 a week just to eat. No pizzas, no McDonald's, you know. Go from driving a brand new Mercedes to a second-hand car that scraped a little bit of money together by working hard for. And because I've been through that, kind of when the freeloaders are coming at me going, I can't afford to sort of get any education, just tell me how to make some money and I'll fund the account. Well, you're doing it wrong. You know, educate yourself first, then fund your account. If you're funding your account and then going into the markets without any sort of basic knowledge, you're gambling. So you're never going to get anywhere. And I learned that lesson, and I started from scratch, literally scratch. You know, scraped 500, I think it was 580 quid or something together, put it into a trading account, and then I compounded it up. And you see me how I do my compounding. I don't compound the account, I compound the position size based on the account size, and just let it grow naturally. And if I had a spare couple of quid, I put that in the account as well. And we talking now sort of 5 years of doing this as my income, if you like. You know, first year was a bit rough. You know, I had to go back on the tools and things like that and do odd jobs to build it up. But I was committed, had the discipline and the foresight to move forward. So I guess the moral of the story is understand what you're doing first and never take a punt. And if you are sort of hanging on to your losers too long, and you know you are, you're not trading, you're gambling. If you're just pressing the button because you see the flashy light, you're gambling, you're not trading. Trading is about understanding what is around the chart. And what I mean by that is you have an anchor chart. Now your anchor chart could be anything. It could be, for me it's the 1 hour mainly. If it's a fast market, it's 1 hour, because I can see what's going on over the last week or so on that hourly chart. I'll then step it out, and I call it +1, -1. So I'll go up a time frame, and I'll see what that has to say. And if that time frame aligns with the hourly time frame, I think it's pretty much good to go. Or I have an idea of where I'm wanting to go. And then I'll do -1, I'll drop it down a time frame, and I'll look for all three of them to align. And if they do, then it is go time. And then I'll drop it in a 5-minute chart and I'll find an entry to get in. But I might only trade once or twice a day. And this breeds my consistency, because I do my homework. I sit and I wait for the conditions to align. If they aren't there, I don't trade. It's that simple. But if they are there, I have a very high probability of getting 10, 20 pips, which is all you need on a day trade, and then I stop. Simple as that. Whereas when I'm speaking to people, and I've had this out with the guys in the Discord many times as well, you've got them trying to trade both directions. You've already lost at that point, you know, because your focus is split between trying to find a short and trying to find a long. So you're not going to win there. That's gambling. Trading way too many products at the same time. So I'll see them say they'll trade the FTSE, then there'll be a cable trade, then there could be a gold trade, and something else will be on. And they might have done well for the day. But again, they've split their focus from one product into multiple products. So therefore, they're not disciplined. They're taking a punt. You're better off having one good trade a day than 5 substandard ones. And I genuinely hope that hits home. I really do. Less is more. And then mark and roadmap your charts. Simple stuff. So ask yourself the question, and I'll be very curious in the comments below, how many markets you trade on a single day, how many pips you're aiming for, but more importantly, do you think you gamble or do you think you trade? Who knows? You tell me. Anyway, I guess to answer Dusty's question, now I've gone round the houses a little bit, is how did I go from where I started to how I am now? It was actually because I lost. And I lost badly. And that emotional impact hurt me for probably a good couple of years. It took me a long time to get over it. And I was snakebite fearful of the keyboard for a good month and a bit after that loss. Never touched the keyboard. I was pretty frightened of it. And when I went back to it, I had a set of rules put down. Trade one market a day, or I'll rephrase that, trade one product at a time. Only be conservative with my pip count. In other words, don't look for the top, don't look for the bottom, look for the middle. And finally, when I'm paid, stop. And I've kept them principles for the last 7 years. And it's taken me from beans on toast to what you see now. And even now, we owe nobody nothing. Everything we have is paid for outright. 2 reasons. 1, I never want to be beholden to anybody ever again. And secondly, once you've been through a corporate bankruptcy, nobody wants to know you. So what's ours is ours, and that's the way I want to keep it. And why not? You know, over the last 4 years, you've seen us sell another business that we set up. Winky and I work solely from home. We travel a lot, and it all comes from discipline. There you go. So tell me your thoughts. And as always, guys, trade well, keep your risk managed, do be disciplined, but above all, do what you love, and the money will follow. See you all in the next one.